The MIW Disruptive Podcast is sponsored by Mentorch. Mentorch is a social development network for mentorship. Go to mentorch.app to seek knowledge and leave a legacy.
Welcome to the Disruptive Podcast by Minority Innovation Weekend. Minority Innovation Weekend is a weekend summit dedicated to aiding minority innovators launch tech-focused startups, exploring emerging technologies, and showcasing tech startups that have a minority founder or co-founder. During each episode, we will discuss innovation, news about tech startup, as well as the startup ecosystem, and interview people of color throughout the startup ecosystem.
Today on Minority Innovation Weekend Disruptive Podcast, we have Adrianna Samaniego. She's an investor with the Female Founders Fund, which is a preeminent early stage fund investing in female-founded technology companies. How are you doing today, Adrianna?
I'm doing well. Excited to be here.
That's excellent. I want to go ahead and get kicked off here. I'm going to start off with a series of questions, and we may have a conversation afterwards. Can you describe your career journey from various roles at Google to being an investor at the Female Founders Fund?
Yeah, so we can, I'll keep it a little short and we can dive into different pieces, but I launched my career at Google first supporting Fortune 500 businesses on their marketing strategies. So working directly with a lot of CMOs, and during that exact same time, I really found this passion, I would describe, this side hustle is a better way to say it, which is the intersection of business and inclusion. And that started with me co-founding the employee resource group, Zola, which was for Latinos at Google, and really understanding how technology in a large corporation like Google could support diverse entrepreneurs, Hispanic business owners, and make their products more inclusive. And so from there, I decided I had an idea to build out Google's Supplier Diversity Program. We built and launched that. And in less than 2 years, we spent, over $1 billion with minority and women-owned businesses. And after spending a few years at Google leading that program, I decided that I wanted to pivot to test in the safest manner what an entrepreneurial experience would be like. I described myself as an entrepreneur for several years, and I pitched an idea to Alphabet's incubator called Area 120, which led me to co-found and co-lead a startup within the incubator, which was a B2B marketplace focused on one of the problem areas that I found within the supplier diversity ecosystem. And after that, I decided, I wanted to leave the utopia, the mothership, and I'm first gen in my family, and so headed off to business school.
Excellent. Which business school did you attend?
Columbia Business School.
Okay, that's New York, right?
Yeah, that's right.
I guess I'm assuming the MBA, is that right?
Yeah, I got an MBA, Columbia, and I would say, I had 8 years of experience going into my MBA, and I think I was very focused going into my MBA as to getting into venture and my next frontier in my career being early stage investing. I had done a angel investment before business school, and that piqued my interest. And then, okay, better.
Good.
Technology problems. So as I mentioned, after leaving Alphabet, Area 120, went into business school, very laser focused on breaking into venture. And I had, prior to business school, made my first angel investment. And so it was really just digging into what is venture. It's pretty opaque. It's hard to understand how to break into it. And so spent my 2 years during my MBA learning more about the venture ecosystem, learning more about investing, and had a variety of internships at early stage VC funds.
Thank you. So right now you work the Female Founders Fund. Could you tell us about that organization?
Yeah. So Female Founders Fund was founded in 2014 as the first fund focused on investing in female-led technology companies. And so, one of the critical stats here is less than 3% of VC funding goes to female-founded companies. And if we're 50% of the population. It's not a pipeline issue. There are a lot of female founders, but the access to capital isn't there. And it also goes to the fact that there are a lot of investors that are women. And so we invest in technology companies. We're a generalist. So we invest across both consumer, enterprise, healthcare, and fintech, for example. And some of our companies that would come to mind, which would be like a Zola, a wedding registry, Billie, the women's shaving brand, and we have CoStar, the astrology have telehealth clinic. So those are a few of them. And we're seed investors. We're based in New York. We're very proud of that. And so we invest in the earliest stages. Some companies that we invest in are pre-launch, others are post-launch, but our bread and butter is the seed stage. And so we are investing out of our fund 2 right now. And on average, our check sizes are $500,000 to $700,000.
You're frozen again, by the way.
Yeah, not anymore.
Okay, you're clear now. Great. All right,
I'll keep an eye on that.
You said this is the second fund?
Yeah, fund 2.
How long does a fund typically last? Like 2 years, 1 year, 5 years?
So if you think of VC, we're looking at investment horizons of 10 years, 5 to 10 years. But that's for the investment to come to fruition. So exits and things of that nature. But you have your vintage year. So you will invest, and it depends on every fund, obviously. But out of fund 2, we'd invest 6 to 8 companies a year. And we're nearing the close of investing out of our fund 2 and are soon to close our fund 3. And so we'll start investing out of our fund 3, but on average, you'll see investing out of it maybe 2 to 3 years.
Okay. Your path into VC, was it pretty straightforward or what?
I don't think any path into VC is straightforward. I think a lot of times you look into the ecosystem and people believe like, okay, it looks like you have to be a former entrepreneur, former banker, former X, and that's how I need to get in. But I think it's a zigzag for a lot of people. I would say absolutely not. I'd be lying if I told you 5 years ago that like, oh, I'm going to be a venture capitalist. Not even close. That would be nice if I was that great at predicting everything. I think it was just based off of curiosity. I love technology and entrepreneurship. And I come from a family of small business owners, not technology operators, but that has been a part of my DNA since the beginning. And so my path has been one, always focusing at the intersection of like business and inclusion. And then ultimately, this is the next, stepping stone for me in regards to a focus area, because there's a lot of progress that needs to happen in regards to driving equity within the venture ecosystem. There's over $400 billion, in this asset class, and less than 3% is going to women. And then if I look at the intersectionality of how much money is going to minority women, it's abysmal. And so a lot of progress to be made, which is why I decided to end up in venture capital. But absolutely, it was a zigzag and purely based off of my love for, technology and just being curious.
In your current role, how do you work with companies that you ultimately invest in, or even just prepare for investment?
Yeah, so like I think that that's one of the things that people don't talk about a lot. I think people are always thinking like VC is like deal, 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 get the deal. But part of the, I would say, the real fun is working with the founders. So once you've made that investment, the check has been written, it's like the real work begins. And it varies depending on a founder. We're really hands-on, meaning we want to roll our sleeves up and help as much as possible, especially at this early stage. Whether it be helping form your board, helping you communicate to other investors, helping you think about your KPIs, helping you, test out different experiments, helping you test out your business model, because you may have found, a product market fit, but that doesn't mean you've perfected the business model. And so we work on a variety of different things, and it depends on the founder and where they are in the journey. But that oftentimes is some of the, real fun.
As far as your investments, I guess what was your most successful investment so far, other than investing in yourself?
That's a great question. I would say so. For the fund, for Female Founders Fund, we recently had Billie, the women's shaving brand, exit to Procter and Gamble, which we're really excited about.
Wow, that's incredible. Were you there from start to finish?
No, I can't take any credit for that. Zero. But it's exciting. It's another exit for female founders. It's another, the way that I think about it, when I see, Mirror, which is not a portfolio company of ours, but when they, reach their exit and their unicorn status, like that is just good for the ecosystem. That's great for female founders everywhere. And so that's the way that I think about it.
Earlier, you mentioned KPIs. I know from talking to other investors, they look at traction. What other metrics are you looking at when you're kind of judging companies for investment?
So everyone has, a different deal flavor, and I think, and everyone has a different expectation of the level of traction, or what does traction mean? It could mean a lot of things. It could mean revenue. It could mean that you have product market fit. Other things that we're looking for is founder fit. And so why is this founder creating or solving, this problem, and how are they uniquely positioned to solve it? I think that that's really important, and that they fit within, the ecosystem, the DNA of what Female Founders Fund values, which is they're collaborative, and they're passionate about their problem. So those are a few things I think everyone's looking for, some sense that what is the problem? Is the market big enough? Because in venture, ultimately, in order to get the returns that we're looking for, you shoot 10 shots, maybe one of the 10 maybe is going to make it. And so you need to make sure that the market's big enough, that the multiples are going to be looking good. And how can this business, can you see a path from, in 5 years, $0 to $100 million? And what does that path look like from a business model, etc. Oh, you're on mute.
I am. As far as how competitive is it? So you may talk, let's say you talk to 50 companies, I don't know, in a month or something. How many of those companies do you think is going to actually get an investment, or it just depends?
It depends, but I would say on average, VC funds are seeing, our fund, for example, maybe 6,000 plus deals a year. And of those deals, I mentioned we make 6 to 8 investments. So, if you do the math, of those 50, probably none in that month. It's about timing as well. So we're looking at the market. It has to be interesting for the market. You could have a great market size, and you're clearly solving something that's important, but there's all these other tailwinds that we're looking at right now. if, for example, COVID is real, we're in a pandemic. And so we have to think to ourselves, is this business recession proof? And it could be, again, that it has those two key indicators, but it's missing the other one, or for some reason the market, it's just not going to support their business right now. If it's a retail front of some sort, or a real estate, it involves any sort of physical interaction, because that isn't going to work at this time. So yeah, it is extremely competitive, which is why it's so important in my opinion, for us to continue to incubate and support, in my personal opinion, like founders of color, because there's already a small percentage represented within the venture-backed companies. And so really ensuring that they have the right access to the right investment firms, the right access to materials and resources to build their business as fast as they need to build it, because it is very competitive. And oftentimes there's this like playbook, and if this playbook is invisible to, or only visible to certain individuals and communities, then that's also going to continue to drive this disparity within the industry.
I guess you get the chance to speak to 6,000 companies, or at least read their slide deck or something.
Yeah, it's a funnel. It's like, you have your 6,000, and then you have, how many of them do you actually take a meeting with? How many of them do you actually take a second meeting with? How many of them do you go into what we call due diligence? So it's definitely a funnel, but it's hard because people, I think of venture and you see Shark Tank and all sorts of other things out there, and you're like, this is the coolest thing ever. But I spend most of my time saying no to people, which is hard because like you end up liking a lot. You like the idea or you like the person. But it is oftentimes you're saying no way more than you're saying yes. And that takes quite a bit of time to do. And yeah, it's not fun.
As what areas in your experience do you feel that if capital were deployed towards them, it'll further their progress?
Oh my goodness. One of the areas that I think is interesting right now, that a lot of people are looking at, is age tech. I've looked at a couple of like end of life companies, and it sounds really interesting, but it's one of those things where none of us will ever want to, be in that situation, but we all will be in that situation. And we have a very large aging population in the US. And so understanding, how are we using technology to support our aging population, to ease, paying bills, to peace of mind, to connect with, your loved ones. There's already a loneliness epidemic. And then on top of that, you put age and it's even larger. And then the last part of it is this end of life planning. When somebody passes, you, as all of us should, be able to grieve, but oftentimes you have all this like laundry list of things that you need to do before you could even grieve. And so how can technology be used to ease that process? I think that that's interesting and really needed. I think that there's a lot of interesting things. I'm doing research right now within the menopause space. It's another one of those areas where every woman will reach menopause, but we've had such lack of innovation and capital and research go into that space. And I want to ensure that when I reach that point, that there's better solutions and products out there. And so there's so many areas. I think that that's like the fun thing about venture and entrepreneurship. It's creating the future that we want to see, the future that our children should live in. And so there's a lot of opportunity. I think there's a lot of opportunity within, just providing greater access and leveling the playing field. So around education, especially right now, like now the entire world has been forced to get used to interacting virtually. Now, how do we democratize access to information and education to ensure that no matter, where you are, you can learn. And you shouldn't stop learning at 18 or 25. You should just, like, that's terrible. We have like a 80, 100-year lifespan and we stop at 25. That's crazy. So there's a lot that we could do in that area as well.
Excellent. I like those areas. I haven't really studied the end of life technologies or services. That might be something I want to read up on.
Yeah, there's quite a bit of companies that are focused on it, and I think it's really exciting.
Adrianna, recently you contributed to the Women Startup Challenge COVID-19 Tech Grant. Can you tell us a little bit about that experience?
Yeah, it was a lot of fun. Again, and it goes to like the environment that we're living in. We all have a little more time, but that was a great opportunity. I had the opportunity to, judge virtually. I believe I reviewed 25 or so finalists, and it had a really thorough rubric, but it was nice because I often, and they were all female founders or had a female co-founder company, but I don't see everything. And a lot of the companies on there, I think what I enjoyed the most is many of them were social enterprises. And I think that I don't see a lot of social enterprises. And so there were several HR tech companies focusing on people with disabilities. And that's another really large population that is underserved, largely underserved. And so over 1 billion people are living with a visible or invisible disability. And so that was one of them. There was a company on there called Lifesaver, which I thought was one of the coolest things ever. But basically, I love fintech, and it was a fintech company, but equipping, the community banks with the back end and front end infrastructure to provide, because oftentimes community banks and unions, et cetera, are giving better rates than, say, Chase or Bank of America. But they have a hard time acquiring those customers because they may not have the fancy mobile app. They may not have, the beautiful website, et cetera. And you have to like physically go in and require some more barriers, but they're giving you better financial products. And so this was really giving community banks the power, the technology power through SaaS, which I thought was really great.
That's interesting. I guess if they're not spending their money on marketing or acquiring customers, they're able to pass on these benefits to their actual customers.
Yeah, and that's what we want. And it's like now that there's the whole no code movement and stuff, and technology is not as difficult to obtain or to understand or to learn. And whether you're like a mom and pop shop every mom and pop shop should have a website. And there was a point in time back in the day at Google, that was one of the things that I focused on, was like, how do we get small businesses, specifically Black and Latino owned businesses, to ensure that they have a website presence? Because in this digital world, if you don't have a website, you're going to close up. And so it's that of the same thinking, that technology will enable you to just do more.
Are you planning to I guess that wasn't a pitch competition, but are you planning on to get involved in any of those this year?
Yeah, there are a couple. I'm doing one with, it's called Start Out and Ramba for LGBTQ entrepreneurs. So I'm excited about that. And there are a lot. And I think that they're due to, again, all of us being homebound, we have more time and ability, and everyone's trying to host the events that they normally hosted, but just do it virtually. I just participated in TechCrunch Disrupt, and that was fun as well.
Are you participating or supporting any other COVID-related
Other
functions?
other than mentoring, I early on contributed personally to a few relief funds supporting business owners. specifically not high tech. Again, I'm from a family of small business owners. And so I think, well, not I think, this country runs off of small businesses. And during times like this, it's one, minority communities, but then two, minority owned businesses that have the fastest rate of starting businesses that are hit the hardest. So I helped facilitate, grants and relief for those businesses, and partnering and advising organizations like Google they've done a fantastic job in creating grants and such, but just advising on how they could do more.
I saw that your former company was starting I guess, certification. I saw an article. It was about Google starting a certification in lieu of like college degrees or something. I got to read more into it. Have you heard about it?
Yeah, I have. I think that it's great, especially at this time, like now, which is less people there. First off, education is way too expensive in the US. And so now a lot of younger individuals are contemplating, do I need to go to a 2-year, 4-year school? Or can I skip it and do some sort of, other program? And Google created this program, which I thought was really great. And it was providing you it's taught by Googlers, but if you wanted to learn, the ins and outs of marketing, or how to, the intro to UX design and things of that nature. And you had the boot camps, and you still have the boot camps, but this was just more accessible for individuals. And I think for a company like Google, having that behind your resume provides another level of like credentials, and that fact that it was like taught by, these individuals gives you great credentialing. And ultimately there's going to be a world, I do believe that I value education because I'm a first gen person. And so I was always like trying, we needed to get into these institutions. That was like my thought process. But at the same point, I do think that there is a world where we don't need to go to the school or stay as long in like a formal program, and that you can learn from everywhere. We're going to be forced to learn that, but you can do an accelerated, certificate program and do just as good as a job as somebody who went to a 4-year school for it.
Well, I'm sure it'll help a lot of people with their student loans out there, or future student loans.
Yeah.
All right. Back in May and June of this year, we started hearing about how corporations and equity firms were becoming more open to investing in diverse founders. Dialogues were starting centered around investing disparities and the general lack of diversity in the venture capital industry. We think it's great that companies and institutions are taking a hard look at what's going on systemically. What's your take on the change in investment landscape?
Yeah, it's interesting. I think it's within the venture ecosystem, it's nascent. Like these conversations have been started because of the social and the social unrest. But, part of me is like, it shouldn't have taken this. It shouldn't have taken that there's, the 100th plus Black men or Black American to die unjustly for corporations to be like, oh my goodness, we now realize that there's systemic racism, and we probably haven't created a fair opportunity for everyone, and we may have aided in this, and what has that done? And so part of me is like, it has taken too long for us to get here, but then there's the other side of like hopefulness, and I'm glad that we're having these conversations. The venture ecosystem, I think, is I won't say it's the last, but I think PE is going to be the last, but the later end of this conversation around at least the tech ecosystem has been around for the last, call it 7+ years, where, you know, a lot of firms like Rainbow Push and Jesse Jackson were advocating to large technology companies that they need to diversify their employees, that they need to provide better opportunities for minority suppliers and ensure that there's equal access to these opportunities. And now we're having these conversations within the venture ecosystem, because the fact of the matter is it isn't equitable. There's a lot of opportunity to improve, whether it's, you know, female founders getting not a lot of investment dollars, to, if you look at the number of Black and Latinx women that are getting funded, it is abysmal. And so, and then if you just generally look at the intersection of, like, okay, take gender aside, what's the pool of funding going to Black founders? It's really, really small. And so why is that? Well, we don't have enough check writers of color. So that's first. We don't have enough fund managers who are of color. And so there's this larger conversation around, one, know where you are, which is what I would tell people. So measure internally. How have you done? What does your portfolio look like by dollars and by founders? Look at your team. How diverse is your team? Because if your team isn't diverse, it's likely, because people are going to say, you know, well, we haven't seen a lot of you know, Latina founders. Well, it's likely because you're have a homogenous network, and so you're going to have, you know, access to deal flow that looks just like you. And so diversify your team. So it's like hire, wire, and then just know where you are and set goals as to where you would like to be. But I think it's positive that everyone's having these conversations. I hope that it doesn't remain, you know, a moment in time and become something that that everyone is really committed to, because it's going to take a lot of time for us to make the progress that we need to make. But there are a lot of funds too that are coming out, institutions that are, whether it be like a Goldman Sachs has their effort, or a Intel Capital, which is, you know, doing really well, has been around for a long time, but they're limited partners in like a Plexo Capital, which is led by Lo Tony, who's one of the few you know, funds of funds that is led by, you know, a Black GM. And it shouldn't be that way, but there are more funds that are being created and more efforts that are being created targeting these issues, which I think is really exciting, because we need just more equity within the industry. That was a long-winded answer.
Hey, it was great. It was a great answer. What's something you would tell young Adrianna? I don't know, whatever young Adrianna is, it doesn't matter what age she was.
Yeah. Let's see. I would probably say, let's see, what would I say? Just be yourself. Care less about what people think. And I would have killed the imposter syndrome a lot earlier. I think it's like that thing that can really get you, and you hear about it, but you know, from a young age, just that first day into Google, year 3 there, and then like even, you know, when to go to business school, which business schools, like all of that, just, you can do absolutely anything that you want to do. You're here for a reason. You have grace on your side, and just like go after it and think as big as you want to think, and be 100% like pure and authentic to who you are, because there's a lot of people in this world, but no one just like me. So why not be just like me?
Absolutely. Adrianna, thank you. This has been a great podcast.
Yeah, this has been so much fun. I appreciate it.
You're on the West Coast, right?
No, I'm in New York right now.
You're in New York? Okay, okay, okay.
Don't hear the horns.
I guess I was thinking about your time in Google.
Yes, I was
Yeah.
on the West Coast. I lived out there for a little over 8 years, but now in New York.
Right. Well, I guess you don't miss the forest fires and stuff. That's awful.
No, my heart goes out to everyone there, though. It's terrible out in the West Coast. Where you're in Baltimore.
Yeah, just down the road, I guess. I haven't been back up to New York in probably 10 years now. I should check it out. All right, I'm gonna be respectful of your time, and again, we appreciate you, everyone here on the team, taking the time.
Thank you again. I'm excited about Minority Innovation Weekend and bringing it online.
Yes, first year virtual.
That's right.
October 3rd and the 4th.
That's right. Awesome. Look forward.
All right, have a good one.
You too. Bye.
Bye.
That wraps up this episode of the Disrupted Podcast by Minority Innovation Weekend. If you haven't already done so, please subscribe. Check us out online at www.minorityinnovationweekend.org and connect with us on Facebook, Instagram, Twitter, and LinkedIn. MIW 2020 is coming up on Saturday, October 3rd to the 4th, so head on over to www.minorityinnovationweekend.org and register for MIW 2020 today.